on to a CNBC-TV18 exclusive. Snapdeal is reworking its growth strategy, and the retailer has told CNBC-TV18 that it is realigning its resources to focus on efficiency and profitability. Now, these comments come in the backdrop of the news that the firm could lay off as much as about 500 to 600 jobs soon. In fact, for more on that, we're joined by Shereen Bhan. Shereen, what are you picking up?
Well, this is unfortunate, but perhaps this is not unexpected. This is what Snapdeal has now said, that they are going to be realigning their operations, and as part of that realignment, they will have to lay off people. In fact, let me just quote to you the letter that has been sent out by Snapdeal's founders to the employees. As part of our overall path to profitability plan that's currently in full swing, we will be reorganizing the company into a lean, focused and entrepreneurial one. We're combining teams, reducing layers, eliminating non-core projects and strengthening the focus on profitable growth. Sadly, we'll also be saying really painful goodbyes to some of our colleagues in this process. This is by far the hardest decision that we've had to take in our lives. What we are given to understand is that the retrenchment process will happen in tranches. In the first tranche, about 300 people are going to be given the option to move on. I mean, effectively, that basically means here's a 3-month severance package and you're good to go. The fact of the matter is that this is not unexpected. And Snapdeal is perhaps not going to be the last company within the startup space to actually make this kind of an announcement. Look at every particular company in this space. They have been saddled with losses. The picture hasn't really improved significantly for any of these companies. In fact, if you look at what Snapdeal has said, I mean, this is all, it sounds polite and nice to say that a lot of the things that we've tried to put in place in order to bring down costs have now started to work. But, the question is, should all of this not have happened earlier? This really is a story, not just Snapdeal, but we're going to see this play out across a lot of other startup companies as well, of chasing growth and chasing growth too fast, too aggressively, too quickly, and not being able to then manage growth. This is a cautionary tale, and as I've been pointing out here on CNBC-TV18 through our show Young Turks, that, startups need to be focused on what they want to achieve, what their capabilities are, where their core competence lies, what they're good at, as opposed to spreading themselves too thin. In fact, if I were to take a look at the letter that Rohit has sent out, he's saying exactly that. He's saying exactly that a large amount of capital ambition can be a potent mix that drives a company to defocus from its core. We feel that happened to us. We started doing too many things, and all of us started sort of going away from what the company was meant to do. And he, of course, takes the blame along with his co-founder, Rohit Bansal. So, as I said, this is not just a Snapdeal-specific story. This is a story that's played out across a lot of companies within the startup universe. Too much capital, chasing too few companies, aggressive expansion plans, aggressive growth plans, young teams, saddled with a lot of potent ambition, as Kunal Behel there points out. Well, let's hope that efforts that are now being made to try and restructure and try and get some sanity into the business will work. As he points out himself, GMV is vanity and profit is sanity. Well, this lesson has to be learnt by a lot of companies in this space.